the advantage is the kind of the psychology behind it. So, like, listen. If it's it's like to give you confidence to hold a target longer than you usually would. So like, in my YouTube video, you know how you said, "Oh, I'm tempted to hold down the sell side." I mean, I'm sure you were joking, but like, you know how you said that, and I was like, "Yeah, I wouldn't do that if I were you," because again, I saw in this fair value gap right here. The advantage of knowing this is as soon as we get into this giant 4-hour fair value gap, right? As soon as we get into this fair value gap, I now know on the higher time frame we are inside this fair value gap, okay? And some people would be like, "Oh, it's a demand zone." Doesn't matter. I know we're in a crucial spot where there's a ton of old orders where I know we're gonna bounce. So on the 1 minute, I start looking for the buy model, and when we're way up here, okay, when we're like way up here, I get that we have not hit this fair value gap yet. Okay, but because we're so far down up here, I'm probably not short anyways because it's just really hard to short when you're this high, for me at least. So I know that this is the sell side of the curve. Okay, I'm not really, usually in these situations, I'm taking the second half of the model. So I'm not usually taking the first half. Do you get what I'm saying by that? So this is kind of the first half. This is the only valid play I saw. It was this breaker. It was also a 5-minute fair value gap. This is kind of the only valid play that I saw. And this is the only, but because we did hit so this is the whole 4-hour fair value gap. We did retrace into it. At this time, I'm like, okay, well, I know we just retraced out in the fair value gap. The reason I'm not taking this is because we did dig into this fair value gap. And usually, like, if you dig into a fair value gap, like, even if it's like an institutional order flow entry, we could just dig into this and rip. So this is why I didn't take this. But now that we're down here, like, I'm kind of like, okay, there's a very obvious high here. Okay, there's a very obvious high here. And there's a very obvious high here. So I'm not predicting that this is going to happen. But what I'm looking for to confirm this as a model is I'm looking for like a break of an old fair value gap, like an old fair value gap that you short. Okay, and this is the one in this situation where like I'm like, okay, there's no way I'm shorting this. We're too low. We already swept liquidity. We're in a 4-hour fair value gap, and this is all going to come together in a second when I say this. But now that I'm seeing this, okay, so now I'm looking for a break of this. I'm not taking a break of this. I'm not longing to break this. I'm just going to see if we break this and hold this as support. That's me kind of knowing that we're in this buy model, and I'm going to link the video. Okay, but Zusi on YouTube does a very, very good job of explaining this. Okay, everything I've taught you guys, everything I've kind of showed in my videos about this market maker model, I've taught you everything he teaches in his video besides this idea. This idea being that you want to see this old fair value gap be broken through, and then you want to see it hold. And as soon as you see this, you can kind of start anticipating, okay, this high and this high is going to be hit. And if let's say you take a regular long position, so like 3 minute, let's say you take a regular long position. We never really retraced in this fair value gap right here. Okay, let me just replay this so it kind of makes sense. So let's pretend right here, you know we're in a 4-hour fair value gap. Okay, let's pretend right here that you see us go in this fair value gap right here, okay? I'm going to delete this. I'm going to delete this. You obviously know it's a 4-hour fair value gap. Let's pretend we go into here. I'm buying, right? Okay, so where would your target be if you bought right here? Yeah, exactly. But in this situation, you don't know it's a buy model until you kind of get this break of this fair value gap. So this is kind of, again, I thought it was kind of like, I'm like, oh, well, I knew that, but I really didn't, because after I watched this video, I started back testing. Okay, for this to be completed model, where would we have to hit? This high, right? Yeah, so for this to be completed model, we'd have to hit this high. Okay, and what I learned from back testing is if we do not break these old fair value gaps, so if I just play this again, If we do not, if there's no old fair value gap that we break above with displacement, okay, oftentimes what happens is you'll see we only end up hitting this high and never actually completing the model. So the difference between learning these buy and sell models, the difference that really, again, this is kind of what he pointed out in his video. When you see us break this old fair value gap with displacement, you kind of treat it as a swing high. That's your trigger to be like, okay, I know this is gonna hit, but because we broke this with so much displacement, that gives me confidence this is gonna hit. If this was not here, I'd honestly probably hold till this high, because what I learned from my back testing is, if we end up never breaking an old fair value gap, what happened is we would hit this high, okay, and then we just end up rejecting again, and then if you would runners up here, you would get wrecked. So I think this is really the main component you want to see. You want to see the old fair value gap be broken. If this is an old swing high, again, even if this is an old swing high, I'll probably still take most profit here. The important thing you notice is this old fair value gap being squeezed through and then used as support. And as long as that holds for support, I have confidence that maybe I don't need to take as much of my position off here as I need, and I'm more confident we're going to hit this high. I think that's really the thing to change it, and I'm going to link that video because I think it's such a good video to watch. Like this right here. I mean, yes, it does. It's kind of giant, but I think, like, yes, I get, okay, if we break the breaker, that would qualify as a buy model too. But what he kind of explained in his video, and through what I saw through my back testing, it's really an old fair value gap you want to break. So an old SIBI, and you want to see that used as support. Breakers were the next best thing though. If you broke that, and if you broke a breaker and use it as support, I can't say with high confidence, yes, you would go up and hit the higher target versus just hitting this one. But I think it was more consistent with these old fair value gaps, like these old SIBIs. Let me just go to the YouTube video real quick. And he kind of trademarked this. So when I first started watching this, he said, like, this is kind of something that I made up, and yeah, because I haven't even seen this before. This is just a basic thing. Okay, right here. This is what makes the buy model. You need to see a break of this old fair value gap. So what happens is you want to see a rejection off of it. You don't have to see a rejection off of it, but you want to see a break above it and then a fair value gap. So this is kind of what he kind of trademarked, where before him I have not seen anyone talk about this. But do you see this, how it's kind of something you don't really look for that much? Yeah, so I would really suggest watching this video. I'm gonna just link it. This is the missing piece that I kind of needed. But everything else he taught, like, I already knew. That was kind of the missing piece. So, like,
I need those files, Ryan.
Alright, I'll do them in a second. 1 second, guys. I can do it after this.
So you said you were doing sources.
Yeah, I know. I finished them.
And then you were doing that.
Yeah, I'm going to do the taxes in a second.
So what happened to the taxes?
I'll do them when I'm done with this.
Okay, so close out your computer and you can work upstairs on
No,
mine.
Mom, I'm going to do it in like 20 minutes.
What you did was you didn't follow through with what you originally said. That's what you did, Ryan.
Okay, well, I have to do this quick class first.
You don't have to do this day trading for anything. Unless you've switched programs.
I did not switch programs. I'll get to it in a little bit.
So you are off the computer as soon as you are done with those things, and I want those by 8:30. And you can jump drive them.
It's gonna take me like an hour to get them, but I'll try my best.
So 8:30, you have 45 minutes.
Okay, and also
and then
I have
you're
another.
Off the computer.
All right, then I need to use your computer when I go back upstairs because I have another assignment too I need to do.
Okay.
All right.
Then you should have been doing that before doing these hobbies.
Okay.
That's why you wanted to come home.
All right. Well, I would have been home either way at this point. So. All right. Sorry, I'm back. So basically, what I was saying is this is the missing piece. You really want to see this old fair value gap being broken through. I have so many tabs open, but I'm gonna link this video in chat. I'll link it in trading chat for now. Don't watch it now. Watch when I'm done with this. Okay. So again, save that to watch later. I think it's very important for you new guys who have not watched any ICT content yet. Again, if you go to the Where to Start channel, it looks like most of you guys in here right now. I know personally you guys know what ICT is, but there's a couple names that I've not recognized. But if you go into Where to Start channel, it's in the education section. Go to the top and start watching that 2022 mentorship before you watch the video I just posted, because the video I just posted, you won't really have any clue what he's talking about unless you've watched some ICT content. But yeah, this is kind of the missing piece that I think is important to look for. And basically what this tells me is, yeah, I'm still confident we're going to hit this high. Did someone just say something? So what this really tells me is us breaking through this whole fair value gap. What this really tells me is, yes, I already know we're going to hit this high, even if we do not break through it. Like if we break through this, or let's say there's no fair value gap here. There's no... someone talking? Okay, I'm going to mute him. If there's no fair value gap here, I would still be confident we're going to hit this high. I just want to be as confident for this high. The fact that there's a fair value gap here that we break through changes everything. That kind of tells me, okay, I can kind of hold more of my position up here. And again, you don't need to draw these boxes. These are kind of just there as a template. So let me just exit out of this. Right here, I am bullish. In live this is live time. So as long as we hold, I would not want to see this low broken through again. But as long as we hold this fair value gap here, I also do like we equal highs up here. I am bullish. My next target would be this high. On the bigger time frame right here, yeah, ideally there's no 15-minute fair value gap down here. You really want to see us hold this fair value gap. We should hit these equal highs any second here, okay? For you new guys, what if on a smaller time frame? What does this look like? This looks like a double top, right? Okay. What happens is these double tops, they get broken through, okay? So when you see these double tops, those are kind of the price targets. But again, this is it's 7:47 p.m. Okay, you do not want to be trading at this time. The most important thing I've learned in ICT is you want to trade during the kill zones, which again are very high probability. I used to try trading Asia all the time and I get wrecked. I wouldn't get really wrecked because it wasn't that volatile, but I lose a lot. But yeah, Mike, do you have that? Are you gonna watch? Do you have that video kind of saved for you to watch? Yeah. Yeah, I would like to know your thoughts after you watch it, because again, that's the one thing that kind of, if you backtest it, it kind of changed a lot for me. And it's. Yep. Yeah. Yeah, there's a lot. Yeah. The thing with the 5-handle moves are like let's say here for example. So like right here. Okay, is a fair value gap. Your stop loss would be below the swing low. If you get in at this fair value gap, you have what, like 2 points of drawdown here, not even like 1 point of drawdown. Okay, this is at 7.5. Okay, so 5 candles would be 2.5, which would be right here. So no matter what, like you don't even, the thing with the 5 candle move is, you get into the fair value gap, you see a high displacement. You don't even have to wait till we hit the swing low, which is really nice with the 5 handle moves. You literally just set your take profit for 5 handles, doesn't matter where it is, and that's your take profit. That is very, very nice, I will say. But like, yeah, that's yeah, I think that's a very good idea as well. I do want to. What do you say? Nah, not really anything. I'm just kind of going over some few things. I'm not gonna be here for that long. I do have to get some work done. Yeah. Yeah. It honestly depends on like the news. Like Friday, I saw we had a ton of Fed speakers, so I was not really planning on taking too much. But if I did see the opportunity, I was gonna take it. If it's a day with like, let's say 8:30 data, like PPI data, CPI, and never mind, maybe not CPI, but like yeah, if there's data like 8:30, what that tells me is that's gonna set up for volatility throughout the day, which is like, okay, this should be a good trading day. Same with like NFP. You don't want to trade before NFP, but like when we have the NFP at Friday afternoons or on Fridays at 8:30, usually after NFP, I've seen some really good trading days after we get the NFP data. Because again, I guess with no news at all on a day, I guess price won't be as volatile. Okay, if you think about it, if there's no news all day, well, price is not going to move, right? You're going to get like these, you will get some 5 handle setups, but it's not going to be as good as a day where you do get news. But like if I see there's 8:30 news like NFP, I would say the only exception is CPI. I think the reason why I don't like CPI is because it's like a 50-point drop sometimes, and then sometimes we have zero structure to base the trades off of besides like old structure. But like with NFP, if it's like a 10-20 point move, what happens is we either go back up, fill the whole move down, hit buy side, or you just keep going down to like a longer term liquidity. And on NFP days, if you go to the 1 minute, you'll see like this right here is a 5 handle move versus some days this will be like a 3 handle move right here. So I really look for, I see if there's kind of 8:30 data or not. If there is, and there's no other news throughout the day, then that's a good trading day. If it's like FOMC, I'm like, yeah, I'm not trading that because that's in the middle of the day. But the 8:30 data days I like trading after. Yeah. Yes, I agree. Yeah. The thing is with that is yes, that's like, yeah, that's part of the answer. So like if I go back to here right here, I knew there's more Fed speakers coming up, right? Okay, so let's say I theoretically take a look at here. This is actually a fair value gap. Okay. And your stop's below here, right? Because again, your stop loss if you take a fair value gap's below swing low. So theoretically, I'm long in this fair value gap, right? So my 5 handle move is up here, and if you play this, I know there's a swing high up here. Okay, so I don't think it doesn't stop me. It's another fair value gap right there. Okay, right here I'm getting out. Okay. If I am truly not sure, I'm like, okay, I know there's Fed speakers, but this also looks like a 5-handle move play. What I'll do is, like, again, I just kind of see what happens after we hit this high. So I'm getting out at this high, but I'm not selling my full position. This is where I'm like, okay, I don't really know if we're gonna hit this high or not, but that's kind of the point of leaving runners. This kind of seems like a very easy, and yeah, I already knew this kind of explanation. But if you're not confident, like if you get scared, if you see, okay, there's a 5-handle move, and you see like an obvious high, you maybe see a buy model, then I think it's worth it to leave some of your position on the table, leave the stop loss at rest, or leave the stop loss for the rest of your position at break even, right? So down here, I think it's worth it to leave a few runners. Let's say this is a here, okay? So I'm just gonna cover this up with black screen. And it's kind of, let's say it looks like this right here, okay? As soon as I see this high, I'm getting out. Because if you look at this price action, okay, well, how do you want to trade this? So if you see this, I'm like, okay, well, we know earlier is bench city. Okay, we didn't get any volatility earlier, so I'm not confident we're going to hit this. But because of the earlier volatility down, you think, okay, there's a chance for volatility to come in here, so maybe I will hold some more up there. But if you kind of see price action, like, just kind of do this all day, okay, where we're just consolidating, then yeah, I would probably take my full position off here. It's really based on what happened previously, okay? But the only reason in this situation I would leave a few runners on is because we got a pretty big dump at open, which means this is some nice volatile price action, which, again, this is kind of more of a void, and what happens, we usually end up filling them. We kind of start getting that curve. But if this wasn't here, I probably would have just taken my whole position here. So I just look for the nice model. If I see like a, you know how people draw the drawings in their chart, like, oh, a dinosaur pattern's forming because it's like a really ugly, like no one even knows what's going on. If I really can't tell, okay, I don't know if this is a buy model, I'll take my full position off here and just kind of watch. Does that kind of help explain a little bit? Yeah, so I just kind of look at prior price action. Again, if I see no prior volatility, like this was good volatility, I'll take most of my position off. If I see just consolidation, couple decent moves here, like this is a decent move, this is some decent volatility, I'll probably just take most of my position off of here. I mean, that's me personally. Like if you look at this overnight session, okay, like if you look at this overnight session, right? Like you do not want to trade this obviously, but let's say, okay, I'm taking a fair value gap projection here, right? For here, again, where are you supposed to hold? You're supposed to hold for this low. But me knowing this is overnight and me seeing like, I'm like, oh, this volume's horrible. Okay, the chances are I'm not gonna hold a full position way down here because anything could happen. It's overnight. I know you're not supposed to trade overnight, but if you did, it's kind of like, okay, if we hit this high, if we hit this low, it's like, okay, that was a nice 3-point scalp. I'm gonna take some off because it's overnight. So if you kind of see this consolidation, we're just in a range, take some. I would be off every time we hit like an obvious swing low. I'd probably be mostly off, and you can see we end up hitting it later. But again, because this is overnight, I don't really care because anything could happen. There's low volume, just bad price action. I'm just looking for the closer targets, not really the farther ones. Yes, exactly. But yeah, also displacements. Yeah. Of course. Yeah. Yeah. To answer your question, it goes back to the old fair value gap thing. The moment I see a giant candle displace through an old fair value gap, that's the moment we're like, okay, the fact that we are breaking through an older fair value gap, like right here, tells me there's a lot of volume coming here. That's usually when, okay, you can probably find a position. Like same with like this right here. Okay, if you look back at like, I think there's a 3 minute actually. Right here. This old fair value gap. I remember this day. All day leading up here, this was very, very slow, and I was really interested in taking a trade. As soon as I saw this candle right here blow through this old fair value gap, that's kind of, again, it's putting off a buzzer in my head. Like, okay, you gotta realize this is institutional. This is an institutional candle right here. The moment you see us break back above that, you know volatility has to come in, and that tells me, okay, we should get like volatility here. This is when I'm gonna start looking for movement. Doesn't mean you will get a move, but stuff like these small little things, like down here, it's like, okay, this is accumulation. Yeah, maybe I could have gotten in, but it would have been slower. As soon as I see something like this, or just a breakthrough, some old fair value gap, some old order block, I'm like, okay, we're probably bound to get a decent move here. It's gonna take a lot of orders to rip through these old fair value gaps. So that's kind of what I've been looking for in the past, like I would say 2 to 3 weeks. And I know some people, like, they say set alerts. Another thing you can do is, like, I know if you know AM Trades, I've talked to him a lot. What he does is, like on Friday, okay, I guarantee you he did this. All AM Trades is doing is Friday, he's doing this. He's going right here, clicking the plus button. Oops. Oh, this is, sorry. What he's doing is, all he's doing is going right here. He's clicking add alert. Okay, so he's not looking at his chart until we hit this low. And again, it's kind of obvious we're going to hit this low. Like when we were up here, I just chased a short position because we were so close. So I was like, okay, we're going to hit it. What AM Trades does is he just sets an alert this low. When we hit this low, that's when he starts looking at the charts, because oftentimes, usually after we hit a low, that's kind of when you get your move, versus on your way to a low, like right here, okay, this is kind of tough to trade. But as soon as you hit the low, it's kind of like, okay, now I'm going to look for a trade. So that's another thing you can do, just set alerts at the high day and low day. As soon as we get to either of those, just that's when you maybe look at your chart, see if there's some kind of move. Because when we open up the day and we're in between yesterday's previous day high and the previous day's lows, sometimes like it's very hard to guess which one is going to be hit. But once one of them are hit, that's kind of, again, it kind of gives you your framework for a setup. Because if we hit high day, start forming a short setup, well, that's a textbook ICT setup, okay? Because we hit buy some liquidity, boom, we get a 22 short setup. That's the one you take. So that's what he does. But for me, because I'm watching and live trading this whole, like all week, every day, like 2 hours, 3 hours a day, I'm just looking for, okay, are we getting slow moves through old fair value gaps, or are we getting just giant breaks and a bunch of volume coming in when we hit these old fair value gaps? And that kind of tells me that that might be a good time to look for a potential trade. But yeah, that's my answer for that. Right now, yes. I am bullish on the dollar still, but I think there's a possibility we retrace back in this 4-hour fair value gap right here. So I think this has short-term downside before we end up hitting buy side again. Even right here, I think we're gonna end up hitting this fair value gap right here, which is obviously that's bullish for ES right now. I know I'm almost 100% confident this will end up hitting buy side. Let me check. Yeah, almost. Yeah. What could happen is, if we might not get much movement tomorrow because this is a pretty big candle. If they leave this open as a fair value gap, that means tomorrow we probably won't see that much volatility if they want to leave this open. I'm still bullish regardless, but I really want to see them leave this open as a fair value gap. I want to see ES pump a little bit. But yeah, that's kind of why I'm bullish there. Does anyone else have any questions? I do have to go off and do some work. Just let me know in trading chat real quick if you guys have any questions. After this video, I really encourage you all to watch that video link I posted. Yeah, right here. Yeah. Yeah. Okay. Yeah. When we do get back up into here, yeah, so the thing is, when we do get back up here, I will look for a short setup if we get in here. I don't know if I'll take it. It has to be very, very textbook if we get it. And the reason I'm saying that is because on the 4-hour time frame, like, we're bouncing out of such a big fair value gap right now, where it's like, okay, I think we're gonna get more than a 5-handle move out of this fair value gap because just the magnitude of this fair value gap right here. Let me try to do this real quick. If there was no fair value gap here, okay, I would probably think this is more of a shorter term bounce, but because of how big this is, I think this might be more of a longer term bounce. But it's kind of tricky here because I am still bullish on DXY, which means more downside for ES. We have seen EX and DXY not correlate as much in the past where, okay, we might get a little pump on both. But for this big of a move where I think DXY is going to go this much up, that definitely means it still has a little more downside. I will be watching, again, like you said, I will take a short setup maybe if we see one, maybe around here. If, again, what I'll be watching for is if we get a ton of volume going through this, I can almost say with 90% confidence we will end up hitting these equal highs. Only if we break this and hold this. If we break this with like a decent volume candle and hold as support, I think this is the next target. Again, if we do get a short setup from here, even if we get a short setup from this, I will potentially take it and see what happens. I probably won't hold it for much more after 5 handles, but I'll kind of just watch and see. Yeah, does anyone have any other questions before I get off in trading chat? I'll give you guys like a minute to type whatever. Alright, if there's no more questions, just again, tomorrow if you guys have any questions during live time where it's going to be easier for you to ask me questions. Yo, Breeze, are you talking to me? I don't think he is. Yeah, tomorrow if you guys have any questions during live time where you kind of see a situation you don't know what's going to happen, or if you don't know what's going to happen, that doesn't mean I will, but I can answer to the best of my ability. Again, ask me tomorrow during live time. I think a lot of people get questions that come up live time, like, oh, what are you taking this volume and balance? What are you taking this for everything up? Whatever. Does not mean a trading chat, but again, that's it for now. Hope you guys have the great rest of your night. And for the guys in my premium, I'll see you guys. I'll probably be in voice around 8:45 to 9 tomorrow. We'll see though. But for now, peace out.